Good morning, traders and investors, and welcome to the weekend update here for Sunday, November 9th. So last week, we finally saw a little bit of volatility start to creep into the market with a little more aggression. Let's take a look and see what that might mean as far as trading going forward here in the coming week. So this is the SPX. I want to zoom in here a little bit. As you'll recall, last week, I mentioned that we could get a little bit more of a continued pullback. That would not surprise me at all. I wasn't expecting it to be a dramatic pullback. I was expecting it to possibly come down here into this 6,600 range or so, which is almost exactly where it came to. And then it started to rebound off that. It actually rebounded with some aggression on Friday. So as we take a look at SPX, we can see that while we did have some down volume days that were a little bit higher, in other words, a few of these days right here where we moved down, volume was up a little bit, not a lot. Then on Friday, we gapped down, we rebounded pretty hard during the day, and that was a decent volume as well. So there's not anything right this moment, volume-wise, that is indicating a push one direction or the other. If anything, it's leaning to neutral to maybe slightly bearish. What we do not want to see in the market is we don't want to see some sort of a break, probably below this 6,500 area would probably be the general range that I would look to make sure that we don't break below. If we did break below that 6,500 mark, I'd start to skew a little more to the bearish side. So that is SPX. We take a look at SPY. Of course, SPY is going to look almost the exact same. But I want you to note on SPY here that on Friday, we had a little bit higher volume on that. I hesitate to call it an update. Technically, it was an update. But more important than the fact that the market was up a little bit was the fact that it ended much higher than where it opened. In other words, we had this gap down, and then during the day, strong buying came in and brought us to a close at the absolute high of the day. That is a bullish pattern to some extent. Again, how bullish? Not real sure. I don't necessarily see us probably breaking to new highs in the next week or two. And I do think we could show a little more weakness again down into in SPY, maybe that 660, 650 range. So I'm looking at a range of probably 650 to 690 as my playground for my options trades for the coming week or so. If I take a look at ES, looking very similar there. We see we had a little bit more volume on the down moves in ES, but all in all, everything's pretty similar. Now we're going to look at VIX, the volatility index, the fear that's in the market. We definitely had a spike in VIX a little bit this week, particularly on Friday, but look at that reversal. So we gapped up, VIX gapped up when the market gapped down. In other words, on Friday, market gapped down, bunch of fear came into the market right on the open. And then throughout the day, as our market climbed higher, volatility started to ease. So volatility dropped off during the course of the day on Friday, and to where the fear was certainly much less by the end of the day. If we take a look at the Qs, very similar. Now this is called, if you're into candlestick patterns, that pattern here, if I zoom in on this, that particular candle that happened on Friday, many people will call that a hammer pattern, and that is a more bullish type of a pattern. We often see that when our market is putting in a temporary low. Again, the general way this works is you get this gap down, bunch of fear comes into the market on the open, on that gap down. Few people start buying, saying, hey, I'm going to buy this dip. And then that accelerates, and it accelerates to the point where you end up making a new high on the day. Not a new high overall in the market, but a new high on that particular day. And that will create this hammer type pattern that we're seeing here. So that was the Qs. Again, very nice volume on that move. And then volatility, we're going to see the same thing. Volatility gapped higher on the open, but then volatility subsided during the course of the day. Very good. Again, fear going out of the market. IWM, very similar story. IWM also gapped down. Now, what's interesting about IWM here, if I zoom in a little bit, is we'll see that we actually even gapped below this prior low a little bit. So that's of a little bit more concern with IWM, the fact that we did break this prior low mark on the open. But we also had some pretty decent volume come into IWM by the time the day ended, again, driving that price back to an all-time high for that day. So good reversal on IWM. We're going to see the same thing on volatility. Big gap on the open. Volatility was much higher as the day progressed. As the fear subsided, volatility came back out of the market. If we take a look at gold, GLD, as I had mentioned all the way back here, I had indicated that I expected probably a bullish move in gold coming back to the top of this pattern, busting through it with some volume, which is exactly what it did here, and then ran to new highs. I was expecting a pullback. I actually thought the pullback might have been a little bit deeper, maybe around 50% of that large move. It has not pulled back 50%. So at this stage, I'm anticipating probably a chop sideways and then ultimately, more likely than not, a move higher in gold. So again, the main takeaway for me this week is that as I set up options trades, whether that's a condor, whether that's a butterfly, whether that's my new favorite diagonal trade that I developed and that I've been sharing with people in the YouTube channel. So I'm going to plan on a general range here in the 660 to probably 690 range as being my general playground where I would look to structure options trades. So we've got those three, but let's go down and count some green checks here. So we got the three above, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 26 winners in a row. And then, yes, there were a couple losers that were scattered in there. And then we go on with more and more winners. In the alert service, in recent months, as I've been trading the diagonal trade, the diagonal has had a 95% win rate, an extremely consistent trade, the most consistently profitable trade that I have ever traded. If you're interested in knowing more about this, if you're not currently part of the alert service and you'd like to know more, I'm going to put a QR code on the screen here for you to take a look at. Then if you'd like to know a little bit more about the diagonal trade, which is the trade I developed that's been producing those phenomenal results, I'm going to have you take a look at your screen over here for the next YouTube video that'll give you more details on. Take care, everyone.